What's up everybody and welcome to Drive to Thrive. My name is Adrian and in today's video we'll be discussing Tesla. Now I hope everybody is having a great start to the year so far. I know the markets have been on fire here as of late, which leads me to believe, are they trying to trap us on the wrong side here, and are they going to rug pull us? Let me know what you think in those comments below. Otherwise, let's get over to the computer and let's take a look at Tesla. Alright guys, before I started recording this video, I took a look at my watch list and I couldn't believe how many stocks have been just flying the last couple of weeks here. Anything from Meta to Amazon to Nvidia, you know, all the big names out there, they have been running up except Tesla. Now, I think there's a lot of negative publicity with Elon Musk and kind of what's happening with Twitter and everything like that. Him selling the shares definitely didn't help. And I think Tesla is just getting grouped in the wrong kind of light right now, which provides us with a great opportunity if you believe in the company and if you believe in Elon Musk for the long term. Right, let's take a look at this weekly chart of Tesla. And just to let you guys know, in today's video, this is more from that technical perspective. If you want to get some fundamentals on Tesla, there are lots of great YouTube videos out there, but I'll be looking at Tesla more from that technical perspective and what I see in the charts here. So on the weekly chart, we're hitting this support level around $120, which we haven't really visited since going back to that August to September of 2020, so over 2 years ago. Now from those all-time highs here back in November 2021, we are currently down about 70 to 71%. So this is why I think if you believe in Tesla and if you believe in Elon Musk for the long term, you definitely want to start scooping up a little bit of shares here and there. As always, this isn't any kind of financial advice, but we are at a nice support level right here. Now, that doesn't mean that we can't go lower. You know, my next price target is sitting somewhere around here, around that $94 to $95. And if this level doesn't hold, then possibly we could go as low as $60. And worst case scenario, this is like the stock market just absolutely gets destroyed. We have way more pain in NASDAQ, way more pain in the S&P 500. And possibly we could go as low as $30, which I think would be an opportunity of a lifetime if we get down there and if we have any kind of money left over to buy the dip. So anyways, looking over here at that MACD, currently we're still speeding down. You know, the lines are still separated underneath the zero line, so lots of bearishness on that weekly MACD. But the stochastic RSI is in this extreme oversold reading, which means lots of room above us here to move up. So possibly could see a returns of anywhere between 30 to 50%, you know, before we see another kind of pullback. Now, nothing is guaranteed, but I do think if we get some nice news and the earnings come out a little bit better than expected, we could see Tesla run up to anywhere between that $200 to maybe down to around $180. So keep an eye out on that. On that daily chart, which is a little bit more short term, we are, like I mentioned, you know, getting pulled back in this $120 support. We did briefly dip beneath here, but this is where you see lots of buyers step in. Check out this volume coming in, you know, over the last month here. Lots of volume. So, you know, lots of people are looking at these charts, you know, same way that I'm looking at it. That MACD is beneath the zero line, so that's a bearish momentum, but we did have that crossover here, so some positivity on that MACD. Now, looking at the stochastic RSI, we were definitely in this overbought, you know, reading, so look for this thing to come back down, possibly retest these lows around $100 to as low as $93. But then if those earnings, like I mentioned, come out a little bit better than expected here on Wednesday, January 25th, and look out, and Tesla could be on a nice heater here. Now, quickly, let's maybe jump over to that monthly chart. And on the monthly chart, we can see that the MACD has finally come from that overextended reading right here down to this more natural zero line. And again, we're possibly going to get over rotated here, so some pain may be more ahead, but overall I think this is a nice area to start scooping up some shares here and hold them for the long run. Now let's quickly jump over to investing.com and let's see some financials here on Tesla. So overall here our margins are looking pretty good. Operating margins, net profit margins, return on investment, all positive. Let's see that debt to equity around 15%, so nice low debt to equity. And we do have positive operating cash flow of 21%. So again, Tesla looks really good. It's a healthy company and you're buying it at a 70% discount, which I think is a steal right now. And if it goes any lower, then that just means you gotta add to those shares and keep buying. But like I mentioned earlier, none of this is financial advice and it's up to you to decide where and how you want to invest your money. Now, before I end this video though, I want to leave you guys with this chart right here of the psychology of market cycle. And I would love to hear from you guys, which stage of this cycle do you think we're currently in? Are we in the anxiety, the denial, the panic phase, capitulation, anger? Let me know in those comments below. Otherwise, thank you so much. Enjoy the days and the weeks ahead and we'll see you in another video. Cheers.